Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate filings to find the actual story. Today we're looking at Solventum Corporation and their recent filing about a significant stock sale. Get ready, because this one involves a major shareholder unloading a chunk of the company, and it all happened pretty quickly. Before we dive in, if you like getting these clear, no-nonsense breakdowns of important company news, hit that subscribe button. Also, we've got a growing community on Discord where we discuss these filings, so the link is in the description below. So on August 13th of 2025, something big happened for Solventum Corporation. They entered into a special agreement called an underwriting agreement. Think of it like a deal to sell a bunch of their stock. Now, this wasn't Solventum themselves selling new stock to raise money. Instead, it was a big sell-off by a shareholder, and that shareholder is none other than 3M Company. Yes, that 3M you know for sticky notes and scotch tape. The deal was made with some pretty big names in finance as the underwriters. We're talking Goldman Sachs and Bova Securities. These are essentially the big banks that help sell stocks to the public. They agreed to buy a massive amount of Solventum stock from 3M. Specifically, 3M agreed to sell a whopping 8.8 million shares of Solventum's common stock. This is a substantial number of shares, representing a significant portion of the company's stock. This stock offering was all set up legally. It was registered with the Securities and Exchange Commission, a standard procedure when companies sell stock. The registration statement became effective automatically, which means all the paperwork was in order for this sale to happen. Here's a crucial point. Solventum itself is not making any money from this sale. They didn't issue any new shares and they won't get any cash from 3M selling these 8.8 million shares. This is purely a transaction between 3M and the underwriters. On the same day, August 13th, Solventum also put out a press release. This was to announce that the price for these shares had been decided. So you had the behind-the-scenes deal making and the public announcement about the pricing happening simultaneously. The stock being sold is Solventum's common stock, which has a very small nominal value of just 1 cent per share, but it's the trading value on the exchange that matters. And where can you trade this stock? It's listed on the New York Stock Exchange under the ticker symbol SOLV. So what's the big picture here? 3M, a giant corporation, is divesting a significant portion of its stake in Solventum. This could mean a few things. For Solventum, it shows that a major investor is likely exiting or reducing its holdings. For 3M, it's a strategic move, perhaps to raise cash or to signal a shift in its investment focus. Since this report mainly details the agreement and the sale itself, there aren't any complex financial tables in this particular filing to dissect. However, the event itself is quite telling. A large sale like this can impact the stock price. If 3M was selling because they believed Solventum's stock was overvalued, that could put downward pressure on the price. Conversely, if they needed cash for other ventures, it might not reflect negatively on Solventum's prospects. It's worth noting that 3M is a colossal company with diverse operations. Selling off a part of a spin-off or a subsidiary like this is a common strategy for large conglomerates to streamline their business, unlock value, or focus on their core operations. Solventum, being a relatively newer entity in terms of its standalone public presence, will now have its ownership structure and investor base potentially shift significantly as a result of this sale. The fact that the sale involves major underwriters like Goldman Sachs and Bova Securities suggests that this was a significant transaction, likely handled through a block trade or a secondary offering. These types of deals are designed to move large blocks of shares efficiently, often with the goal of minimizing market disruption. The filing also lists exhibits, which are supporting documents. We have the underwriting agreement itself, which is the main contract. Then there's an opinion from a law firm, Cleary Gottlieb Steen and Hamilton LL firm. And finally, the press release is included. This legal opinion is important because it assures potential buyers that the shares are legitimately issued and that the company has followed all the necessary rules for the sale. It's a stamp of approval on the transaction's validity. The underwriting agreement itself would contain all the nitty-gritty details of the deal, like the exact price, the terms of the sale, and the responsibilities of both 3M and the underwriters. Now, let's talk about what this means for Solventum. When a large established entity like 3M sells off a significant chunk of a company, it often signals a transition. Solventum needs to establish its own identity, an investor base separate from its former parent. The success of this stock sale and how the market reacts to 3M's departure as a major shareholder will be a key indicator of Solventum's independent strength and appeal. We need to watch how Solventum performs going forward. Will they be able to stand on their own 2 feet? will new institutional investors step in to replace 3M's ownership? The market's reaction in the coming weeks and months will tell us a lot. Looking at director and officer information, we see Wade McMillan, who serves as Executive Vice President and Chief Financial Officer, signing off on this report. This indicates the company's financial leadership is actively managing these significant corporate events. From a broader perspective, this filing is a disclosure of a major shareholder event. It's less about the day-to-day financial performance and more about the structural changes in who owns the company. The 88 million shares represent a substantial portion of the company's equity, and their movement from 3M to potentially a more diversified group of investors is a big deal for Solventum's future. This move by 3M could be part of a larger strategy to unlock value for its shareholders by spinning off or selling non-core assets. For Solventum, it's the beginning of a new chapter where they will be judged solely on their own performance and potential without the umbrella of their former parent company. In my opinion, this filing highlights a significant shift in Solventum's ownership and likely its strategic independence. The key question remains, is this a sign of a healthy company ready to chart its own course? Or does it signal underlying challenges that prompted such a large sell-off? The absence of detailed financial tables in this specific report means we can't analyze revenue or profit directly from this filing. However, the act of a major shareholder selling such a large block often precedes or accompanies a period of increased focus on the company's standalone financial health and growth prospects. Investors will be closely watching Solventum's next financial reports to gauge its independent performance. The risks here involve market perception and Solventum's ability to attract and retain investors without the backing of a well-known entity like 3M. The opportunity lies in demonstrating a strong independent business model that appeals directly to the market. Alright, that's our breakdown of this Solventum Corporation filing. What's your take on 3M selling off these shares and what it means for Solventum's future? Let us know in the comments below. If this analysis was valuable and helped you understand what's going on, please hit that like button. And if you want more of these plain English explanations of corporate filings, make sure to subscribe. Don't forget to join our Discord community for more insights and discussions. Thanks for watching, and we'll see you on Insights and Discussions. Thanks for watching, and we'll see you in the next Decode.